Welcome back, Michelle.
Thank you so much. Do you want
Uh,
camera or no camera?
How about share screen to show charts?
Okay, let's
Uh,
get share
that's
screen. And I do have a couple of, you know what, but let's start with this actually.
okay.
I may switch to a different screen, but yeah.
Okay.
So anyway, hi
TLT.
Dale.
Hi, Michelle. How are you? How's the fall going?
Good. The weather in Santa Fe has been great, except too dry. We need rain here in the Southwest.
Yeah, La Nina again, I hear. So I don't know if
Exactly. It's
it's going
supposed
to
to be
happen.
make the east wet and the
Yeah.
Southwest drier.
And if you usually have to buy the grains in a La Nina year, and
Well,
they've been
you're
coming off
already
pretty good.
there.
Yeah, the
You,
beans, $12 beans from 20. So there's been some nice pullbacks there.
yeah. So, how do you want to start? Do you want, do you want to
Yeah,
go?
let's
Can I
go
go?
TLT. Everyone's
Well,
interested
let me,
in
yeah.
rates.
Yeah.
Yeah.
So Dale, so basically we've been really focused on three key intermarket relationships to really understand whether or not we're in a risk off, on, neutral, or what have you.
Yeah.
And actually, interestingly, on Friday, we had some really strong indications, but we went a little bit more risk neutral. And of course, here we are coming in higher today. So we'll see whether or not that sustains. But at this point, the three market relationships are, we look at, first of all, the long bonds versus the SPY. And what you see down here in my indicators is the first one is called leadership. So what you want to see is you want to see the TLTs underperforming the SPY in a risk on environment for the obvious reason that long bonds, which classically is a flight to safety, you want people to be buying the S&P 500 and not the bonds. And so you can see that they're still underperforming. If they cross the red line, that would mean now that they're overtaking the SPY. That would be a pretty good sign of caution. So right now we're not there. Okay, this here is momentum, and it's the momentum of the actual TLTs. So the momentum is not that bad. So we're in a situation right here where it's still good, but anything like what happened Friday for the brief moment in time when Jerome Powell came out and talked taper, excuse me, another one of those, or another one of the situations where the SPY sort of goes flatline up here near the highs or starts selling off, or the TLTs firm up a little bit, that would be a caution. The next relationship similarly is actually going to be TLTs versus the junk bond. So I'm going to change this here from a SPY benchmark to a actually,
what are your expectations next week, Michelle? Do you have a,
expectations for the market
for the Fed?
Oh, for the Fed?
Yeah.
Well, I think that you don't hear you hear the other guys saying a lot that they should be tapering and we should be looking at rates and inflation's running hot. And then you haven't really heard Powell say that. So it was the first time on Friday that Powell gave some indication that at least at this point, he's interested in starting the taper program, which is supposed to be in November. What's interesting is the yield curve has flattened a lot, in anticipation of this. So even though the bonds haven't exactly collapsed yet, and I mean the long bonds, you do have the 10-year treasuries that have firmed up. That's where the yield curve flattens a little bit. Right. And so it's interesting because it seems like the market is pricing in the Fed doing some tapering and even the possibility of next year some kind of a 0.25% rate rise. And that would be a healthy scenario. So to me, as long as they keep talking that and they don't have anything more aggressive, it shouldn't really upset the apple cart too much. And so, that's my thoughts on it. But let's take a look at this. Is very key. And I talk about junk bonds a lot because really people have to understand that when investors come in and buy junk bonds, they're buying companies that aren't having a good balance sheet, but pay very high yields. And so in a risk on environment, you're going to go for the higher yield, right? So what you really want to see in this situation, and this is the second relationship. So we looked at the TLTs versus the SPY, and the SPY is outperforming the TLTs. we can check that off as good. However, is it way outperforming? No, it's come off. So we're at sort of an inflection point. Things have to hold up this week. The second relationship, you can see here that on Friday, the junk bonds started to underperform the TLTs. So why do you want the junk bonds to outperform? Because you don't want people going to the 20 plus year bonds, the long bonds. You want them to continue to buy the high yield bonds. And so right now, what we're seeing is junk or HYG, however you want to look at it, is under the 50, has come off, and is starting to underperform the TLTs, the long bonds. Now it's happened before and it's come right back. So you can see if we go back a little bit in time here, of course, things were, the junk bonds were going up, and that was really good, because even though they were showing an underperformance, it was still on the chart doing well. So you need both price and leadership situation.
Can I throw in a question about LQD, which has actually been underperforming junk?
Right. High
corporate. And how can that be? Why would investment grade corporates underperform junk? Just because people want to capture the higher yield?
Exactly right. In a risk-on environment, that's where they're going to go. You don't want to see the LQDs falling apart by any means, but I don't consider that as key a relationship as I do here with the junk versus the long bonds. So right now, as you can see, they are underperforming the long bonds. Well, today will be another day we want to see that flip. So meanwhile, we see TLTs are coming in lower, and it's really hard to tell where the junk bonds are coming in. It looks like basically unchanged, maybe a little higher. So we may see that flip. That would be another good risk on situation. And then finally, my favorite, and is really what's kept us very confident in the market right now. And again, I have to change my relationships here, so I'm showing it to you correctly. This is the transportation versus the SPY. Super important, especially now, but always important to me, Dale, as you know, and one of the key members of my modern family is the transportation. But key right now is because what does this represent? So with all the supply chain problems, and with all the numbers we've seen about lower consumer sentiment and people worried about the holidays and planning to spend less, and the fact that even though COVID here seems to be somewhat under control, we're still hearing things like UK shutting down again. Now China saying things are going up. People are still traveling and flying and things like that. So that's why I like to focus on this, because you can go nuts if you listen to all the fear mongering out there. But yet, even with all of that, look at how robust IYT is. And if you look at it versus the SPY, this ratio is showing that the IYT, or the transportation, is outperforming.
It wants a new high, huh? It looks like it wants a new high.
Potentially. Right. So if you put that all together, what that tells you is that the junk bonds and the TLTs maybe need a little bit more boost. We need to see especially some of the more value type stocks in the IWM to keep up the small caps. But right now we're still showing a little bit of caution, but more neutral. The TLT to the SPY also sitting right there. We need to see a little bit more juice in the SPY and a little less juice in the TLTs. So more neutral, but this one very bullish.
I think there's a big contest, Mish. You win $1 million if you could predict the day the Russell comes out of the range it's been in for, it feels like, a decade.
Well, are you caring whether it's to the upside or the downside?
Yeah, I mean, do something.
Well, I don't care. What's really interesting to me right now is you're very close to the top of the range.
Yeah,
and we're sort of smack dab in the middle. And that's why I'm showing you these indicators, because to really be able to see the IWM take out its most recent highs and the new all-time high, and that's one of those close your eyes and just follow it situation and don't think logically. That I think that's really where the transportation is going to be key to the equation, and also XRT is going to be key. The retail sector is going to be key to that situation. So, and of course the Fed, if they don't do anything crazy, which I would assume that they're not going to do anything too crazy. So there you go.
Maybe we don't have to worry until Powell, it comes up to whether Powell is renominated or not, and it looks like he's not. And maybe next year is when we get some uncertainty with a regime change at the Fed. What do you think?
Right. And
Especially
I've
after
heard
the
mixed,
scandal.
right. I've heard mixed things about the whole thing, whether or
Yeah.
not Powell's going to be reinstated. He's certainly very compatible with Janet Yellen, who still insists that inflation is transitory. So if she has any say in it, I think he might have a good chance of staying. I think it would be smart.
Yeah.
Like you say, it could really things could get hairy if all of a sudden they have somebody new in there and policy starts to change. But anyway, I also wanted to show you one other relationship. It's not necessarily a key market relationship, but it's definitely a key inflation relationship.
Yeah.
And I know, Dale, you and I have talked about this.
Yeah.
But this is silver
versus
versus the gold, right?
Yeah.
So I like to say now, whether you're a silver or gold bear or bull, you hate the precious metals, you're waiting for the precious metals to take off, is irrelevant. What is relevant right now is that silver,
outperforming,
especially last week, really started to outperform gold.
Yeah.
Now, right now, coming into today, silver is only up 0.5%, and gold
it's giving back a little.
Yeah, and well, no, they're on par because gold's up 0.5%, silver's up 0.5%. That's healthy. So when I say healthy, it means it's healthy for silver, but more importantly, it also shows that inflation hasn't even begun to kick into gear yet. So I'm watching the fact that the market's going up while inflation is going up, and food prices are going up, and energy prices are going up, and oil prices are going up. And of course, any intelligent person is going to say, at what point does that inflation versus the stock market, where they both go up in tandem, all of a sudden divide?
Yeah.
And the stock market starts to fall as a result. And usually that would mean they were expecting higher rates. The Fed finally has to do something. But right now, the Fed really does not want to, especially Jerome Powell, and especially going into 2022 when we have midterm elections. Nobody is going to want to upset the apple cart at this point, which is why inflation can really go out of control.
Okay. A very interesting presentation. And yeah, it means economic strength when the silver is outperforming. And you and I remember when the ratio was 40, right? A long time ago. So, maybe that's where we're going. Silver definitely looks like your preferred long here. Any other commodities? And also, I know what I wanted to ask you. You had a response to when I said there were too many dollar bulls, too many euro bears. I guess that, that still applies. There's a lot of dollar bulls, and, the dollar pulled back from those highs, but it's holding 93.5 and trying to bounce.
Well,
is this going to play a role?
Yeah. Well, yeah. And this chart, by the way, let me go back because I like my dollar chart that I can see better on my trade station. So let's go to here. Can you still see my screen?
Yeah. Has it got your UUP up?
Oh, no. Okay. So I have to change.
Oh, you have to stop the share and then reshare.
Right. Let's do that. Hold on. Why am I not seeing your? Come on. Come up here, Zoom. Come on. Come on. Sorry about this.
That's okay.
Quit Zoom, close window, Zoom. Oh, why am I return to meeting? What the heck? All right. Sorry about this.
No, that's okay. We could stay with this.
I don't know why I can't maybe I'm in the wrong screen. It's not allowing me to.
You have to stop your current share and then resume.
I know. I can't even get back into the main Zoom thing. Oh, here we go.
Yeah.
The controls were sort of hidden.
It was in the 70s, ride the curve, 80s, it was 40.
You know what? Well, let's go back to the other charts because you could see them. And even though I can't show you DXY, I could at least show you now. What's interesting is here's the UUP, and this is because I'm on stock charts. They don't have the DXY. They don't do the continuous contract. At least I don't think so. Let me double check, but I don't believe they do. No, they don't.
Okay.
So we'll have to go back to UUP, which I don't really love looking at. I like looking at DXY better. But
Those are
also, I mean, so you mentioned,
stocks.
right, it's
Yeah.
still in a bull trend, no doubt. It's come off a lot, but until it breaks down under this 50-day moving average, it actually is still bullish. I think that it will have a hard time getting through 94.50 to 95 if we're looking back at DXY.
Yeah.
I actually still think it's relatively vulnerable. But let's look at this. Remember, this is still the gold relationship. So this is the UUP relative to the gold. So it's not so much the dollar has to collapse before the gold goes up. It's more the relationship. And right now, the dollar is still underperforming gold. Isn't that interesting?
Yes. Yeah.
See that?
Gold has acted very well in the face of a stronger dollar.
Exactly. And if we look
So
at
what's
this,
going to happen if it weakens is the question you have to ask yourself.
oh, well, then we're really going to be in big
right.
doo-doo with inflation. And then, by the way, this is a momentum indicator down here and looking at the dollar, and it's just sitting on the 50-day moving average here, which means either the dollar is in a make or break. It's either going to hold here and try to test those highs again, or if it can hold here and starts breaking down, it could get a little bit uglier in terms of the dollar. So now you wanted to see some other commodities. The thing that I'm really watching here.
Yeah.
All right, let me just get back to a leadership.
Always interested in what you're watching.
Well, I was supposed to be buying a natural gas on Friday. I wanted it to close above 1840 and it closed at like 1837. I'm like, darn, now it's trading $1 higher. It's coming in up here. But what's interesting about the natural gas is we rode this thing all the way up. We got out and I've been waiting for the opportunity and it actually came Friday, but we'll see what happens here at 20. But nonetheless, the idea is that if you look at the natural gas chart, particularly at the weekly chart, it doesn't look like it's ready to slow down at all. Yeah. So if it clears 20 at this point, I would probably say that that's a good sign. Or if it comes back down closer to around that 1840, then it's probably a good buy against, let's say, 18, because that's where you have a 200-week moving average. So that's still in play. If we take a look at, we've been long wheat. Now, of course, you know, there's the futures wheat and then there's the wheat ETF. So we buy the ETF. It's coming in. It's due to come in right now. I'm looking at it on my trade station, 42 bid at 45. Here it shows that it closed at 39. So it's going to take out all of this 740. And then it has to get through, obviously, these 753. But what you see here is, again, a giant level of sideways consolidation. And yet we have not been able to see follow through to the upside. All of the commodities, including silver and gold, have been a buy weakness, sell strength scenario. Yeah. So I think for those people who want to play along and feel like they've missed it, what I can tell you right now is from my days of commodities trading, when you start to see the sell strength buy weakness flip to weak strength is getting volume and follow through, and that's when you can start to see a real parabolic move. And so that's going to apply to pretty much all of the commodities right now. I'm in wheat, but I like to look at DBA because that gives you exposure to everything.
That's been sideways just forever.
And that's been sideways. So it's the same kind of thing. Now, I think if it gets back over this 50-day moving average, then that would be interesting. So figure it's coming in around 1905. If you can get a move over, I'm looking at 1915, then I would probably want to get into it. But the same situation, even if you say, I want to wait for 1950 to clear, if you get 1950 to clear and you get a situation where volume is coming in on that breakout, that's a game changer for commodities. And along with my silver gold ratio, it's telling you that things could get really hairy and there's a lot of money to be made in commodities for those who like trading it. And for those who never traded, I encourage it because there's gold in them hills, as they say. And then finally, though, also is look at how DBA has been underperforming. I switched this back to the SPY as the benchmark. So that would be something else to look for is, you know, not only would DBA ready to explode, but if it starts to look like it's going to outperform the SPY and the momentum increases, there you go. So, you know, we have some money in commodities now. We're in silver, we're in wheat. We're in energy. Unfortunately, like I said, I hesitated on Friday because it was Friday. But you know, you don't have to be in everything. You can just have good positions in a few of them. We're also in sugar. We've been in sugar for like ever, and I mean forever. This has been my longest running position that I've had. We bought this at 5 and we're still in it. It's come off a little bit, but this is another one. If cash sugar, continuous contract sugar, can get back over 20 cents, then I think that's another one to keep your eyes on. And we'll just add to the position at this point.
You mean 10 cents? Well,
no,
on
it's
this
20 cents.
okay,
20 cents in the continuing. Yeah, SB at SB is trading right now at 19 cents, 0.12. Yeah, so it would be 20 cents.
Okay.
Yeah.
All right.
And then of course, you know, we could look at like, we could look at, I mean, we could look at some of the, you know, steel, for example, which was so frustrating because it went straight down, and that was because of China. Now you have this 200-day moving average and you have a little bottoming formation that could actually get going. Copper, F.A.C.E reported last week, and yet that's still looking interesting too. All of these commodities, as far as I'm concerned, are just telling you that they're basing out and they're getting ready to explode. And like I said, that could be the time when we start to see the market finally get hit a little bit, or it could be that we see both going up for a while. And then, of course, like I said, you want to keep an eye on those rates and the relationship between the junk bonds, in particular with the long bonds, because that could give you an indication, not so much that commodities are going to go down, but that the stocks are going to go down while commodities continue to go up.
And thanks for fulfilling my forecast of you being one of the best intermarket analysts, understanding and teaching the relationships to people who wouldn't understand it without you bringing all these different things to their attention, Michele.
Thank you,
So,
Dale.
you
Thank
know,
you so
excellent,
much.
excellent. I mean, you know, you bring clarity to what, you know, a lot of people see as confusion right now. So bullish, you know, commodities. And if we ever get a weaker dollar, maybe that's a jet fuel for them to come out of here. And thank you for having a giving spirit and sharing with our community all these years, coming back here. And because I know that to, you know, attain the level of expertise that you have, that it wasn't easy. So thanks for giving it away when you come here, Michele.
Oh, my pleasure, Dale. You're a good longtime friend, and I really appreciate your loyalty to me. So thank you.
Yeah. So you know, people want to follow you and you know, see what you have to offer. If you want to show your website now, you know, you guys know I'm a big believer in intelligence gathering. So, you know, you selected a few people, us first, I'm kidding, but that are good. And, you know, you can learn from, it's good to have like a cross section of ideas. And, you know, if you find people that are skillful and you can learn from, you know, I subscribe to a lot of people. I talk to a lot of people. I don't have one original idea in my head. How's that, Mish? All right. So
all right, well,
there you go.
There's the website. This is, you know, we have this thing called, you know, this is the daily. Keith writes a weekly, which is great. We have a new part of it. We're doing a lot of cryptocurrency. So there's all this cryptocurrency commenting here. If you go down here, it gives you the highlights of the week, all the risk gauges. So this is all the free content that's really excellent. A lot of these relationships I'm telling you about is from our Big View product, where we really look into the different relationships there and these gauges. And at Market Minute on Twitter. And also we have a YouTube channel, Market Gauge YouTube channel, which all my hits that I do on the media are put up there. So if you ever want to see what I'm saying to Charles Payne at Fox,
to the globe,
to
the globe,
to the universe, exactly. To the universe, to the metaverse.
Well, you know, Michele works with her husband, Keith. You know, they met on the floor, and you guys are a perfect example of this math. 1 + 1 = 11. So thanks so much, Michele. Good hunting
All right.
good hunting this fall, and I'll get back to you, and we'll set up another time. And I'm going to really be paying attention to the junk bonds here. Appreciate
Okay.
that.
All right. You guys, thank you so much. Have a great one.
My trading warrior sister, Michele Schneider, and you could follow her at Market Gauge, and go to her website, check it out, and we'll see everyone tomorrow for Turnaround Tuesday. In 17 minutes, you could join the team on the Morning Edge, and don't just count your pips, count your blessings. Adios, everyone. Good hunting today. Good luck. I'm not against luck. All right. See you, Monica. See you, Brock. Thanks again, Michele.